All right, let's dive in. The market just had one of those days that really reminds you why you can't look away for a second. We're talking about a massive, massive rebound. And what's so fascinating is what was driving it. On one hand, a big political deal sent tech stocks soaring. But on the other hand, this deep, long-term anxiety pushed gold higher. So, how can both of those things happen at the exact same time? Well, let's break it all down. First things first, just look at the sheer power of this rally. The Nasdaq jumped over 2.27%. Now, that number might not sound huge on its own, but get this, it was the index's best single-day performance in nearly 6 months. This wasn't just a pretty good day. This was an absolutely explosive signal of relief from investors. And a huge, huge piece of that story was Nvidia. The AI chip giant just rocketed up almost 6%. And here's the crazy part. That one stock was responsible for more than a quarter of the entire S&P 500's gains for the day. Think about that. Just one single company basically pulling the whole market up with it. Which, of course, brings us to the big question. A move this powerful, this sudden, it doesn't just happen out of nowhere. So what was the catalyst? What was the one thing that suddenly unleashed all of this buying pressure? Well, the answer came straight out of Washington, D.C. After a record 40 days of total gridlock, a deal was finally struck to end the government shutdown. For Wall Street, this was like the storm clouds finally parting after weeks and weeks of painful uncertainty. And just as a quick refresher on why Wall Street hates shutdowns so much, it's not just about the furloughed workers, though that's obviously a big deal. The real problem for the markets is that it stops the flow of critical economic data. Things like inflation reports, jobs numbers. Without that data, the Federal Reserve and all of us investors are basically flying blind. This deal finally lifted that fog. And here it is. This was the exact moment the log jam broke, a 60-40 vote in the Senate. That was the magic number. I mean, as soon as those votes were counted, the market got the giant green light it had been waiting for. The gridlock was officially over. So, with that shutdown risk finally gone, who were the biggest winners of the day? This is where the story gets really, really interesting because the answer shows this deep split in how investors are thinking right now. We saw a huge surge in two completely different kinds of assets. You had your risk-on tech stocks and your risk-off safe haven, gold. This slide just captures the market's split personality perfectly. I mean, look at this. On the left, you've got pure optimism. Hey, the crisis is over, let's buy growth stocks. But on the right, you see this lingering, deep anxiety. Investors are buying gold because, yeah, the deal is great, but it did absolutely nothing to solve America's massive long-term debt problem. It's like the market was celebrating with one hand and hedging its bets with the other. And you can really see that tech optimism right here in the numbers. I mean, look at Nvidia and Alphabet putting up these huge gains. Microsoft even snapped an 8-day losing streak. This was a classic buy the dip moment, where investors who felt that stocks had fallen way too far just rushed right back in. But then, on the other side of that split personality, you had precious metals having their own fantastic day. Gold hit a 2-week high. Silver jumped sharply. This is crystal clear evidence that even as the market cheered the short-term deal, that worry about the long-term fiscal health of the country is very, very much alive. So let's zoom out for a second. This scorecard shows you just how widespread the rally really was. I mean, it was just green across the board. And while the tech-heavy Nasdaq clearly led the charge with that incredible 2.27% jump, you can see that even the Dow and the Russell 2000, which tracks smaller companies, had a really, really strong day. But, a single day's rally is never just about one headline. While the shutdown deal was absolutely the main event, it all happened against this backdrop of persistent global risks that, well, they haven't gone anywhere. Things like the ongoing US-China trade tensions, conflicts overseas, all these things create this constant undercurrent of caution. But on this particular day, optimism just won out. We saw that really clearly in the bond market, where treasury yields actually rose. And that's a key signal, right? It means investors were selling their safe haven bonds, taking that money, and moving it into riskier assets like stocks. Okay, so with the shutdown crisis in the rearview mirror, the big question becomes, what's next? Where do the markets actually go from here? Well, looking ahead, you've really got two competing stories emerging. The bull case is pretty simple. This rally keeps on going. The shutdown becomes old news, economic data comes back strong, and that tech buying frenzy continues. The bear case, though? That stubborn inflation or some new geopolitical crisis could easily come along and slam the brakes on this whole party. And sitting right in the middle of it all, as always, is the Federal Reserve. What they decide to do next is just paramount. Right now, the market is pricing in about a 60% chance of a rate cut in December. But with Fed officials themselves seeming pretty split, this is going to be the central debate as we head into the end of the year. So that really leaves us with the critical question, doesn't it? Was this rally a true turning point, or was it just a brief sigh of relief before the market finds the next thing to worry about? We definitely cleared one major hurdle, but you can bet the race is far from over. We'll be watching to see what happens next.